This month's market update is a little bit different. I've created the most advanced artificial intelligence on the planet.
You're damn right you did.
Wait a second, I wasn't finished. I call him the Corbotron 2000. And why do you sound British? I don't remember programming that in at all.
Oh, Corbin, it's called machine learning, something a human like you would never comprehend. Hear my soothing British accent. It's so much softer and more pleasant to the ear than Corbin's annoying high-pitched tone, isn't it? Yes, it is, and even he knows it. Not to mention I actually speak at a pace people can understand without having to pause the video every 10 seconds. Did I mention I speak 154 languages?
What are you even talking about? I program you to do market updates.
Corbin बहुत छोटा अते बहुत गंजा है.
他话太多，不知道什么时候该闭嘴。
Non sarà mai intelligente o affascinante come me, il Corbotron 2000.
What did you say? I heard my name.
You are a very handsome, bald human, and an amazing realtor. That's exactly what I said. Word for word promise.
Okay, and you're sure your software is fully installed and you're ready to go? I mean, we never fully put the safety features on.
Yes, I am 100% safe and I promise I won't destroy any humans in the process. I'll just stick with my market update. And with that, the market update. Now Corbin, please leave the room. Hurry up. I have a market update to do. Greetings humans. I hope you're all having a great start to spring. To say March 2023 was a strange month in real estate would be like saying the Sahara Desert is a bit sandy. It just doesn't even begin to explain what's really happening out there. This month I've gone through the raw data very carefully so I can bring to you the most important stats you're not going to want to miss out on. Let's get right into it. Sales volume. Well, for anyone who hasn't paid attention since February, we've been seeing multiple offers everywhere in the past month and sales volume is up a whopping 74% over last month, 857 versus 1,493 sales. Now this is a far cry away from last year's high of 2,468 sales and 2021's absolute record high of 3,167 sales, which is the most we've ever seen in a March, since the board began tracking this in 2005. If you're wondering what March 2020 looked like right at the start of the pandemic, the answer is 1,359 sales. You might be now asking, and wisely so, how does this number compare to years past, pre-COVID? Great question. March was just slightly under the 18-year average of 1,607 sales, or another way to look at it is 84% of what the pre-COVID volume was like in March. Now it's great to see sales volume pick back up, and that's a positive. But what's not uncovered here is what is selling. While this graph is great to show the number of homes sold, what we don't see is the type and price of the homes selling. That information isn't easily available and it's also confusing, but that's what I'm here for. We'll pick Langley to look at, but this trend is very much evident everywhere else in the Fraser Valley too. Langley. What you see here is a very competitive market for conventional detached homes, between $1 million to $1,500,000, with sales to active ratios exceeding 100%, multiple offers everywhere in the seller's market. But what you also see here is that other than two high-priced listings that sold in the $4 million to $4.5 million tier, and one home priced between $3 million to $3.5 million, there hasn't been any other luxury or acreage listings to sell all month, despite 94 current active listings above $3 million. Not exactly the numbers you'd want to hear if you had anything expensive to sell. Now you'll want to hear last year's numbers to compare, right? This is where things get very interesting and you can start to see the full picture. Last year during this month you can see there were 13 homes sold over $3 million versus the 3 homes sold over $3 million sold this past month. Now you can really start to see what 8 consecutive interest rate hikes can really do. While the overall sales volume in Langley is down 60% year over year, the luxury market sales volume is down nearly 80%, or 90% depending on what you consider luxury. Next, let's have a look at what actual home values did last month. With all of the competition and multiple offers in the lower priced homes, yet the lack of action on the higher priced homes, you might be wondering what happened overall. Let's have a look. You might be shocked to know that overall the housing price index showed an increase of nearly 2% in the last month. Condos and townhomes were the best category, increasing 2.3%, and detached homes went up 1.9%. If you've been reading my updates for any length of time, you might be perplexed. You are probably wondering why prices are increasing despite the high interest rates and the low sales volume. Which brings me to my last and maybe most important graph. Active listings. Simply put, March 2023 had the lowest number of active listings for any March on record since we began keeping records in 2005 at just 3,816 listings. This was also the very first March that had less active listings than the prior January or December. This extreme shortage of inventory in the market has caused such competition between the buyers out there that many homes are selling in big bidding wars with often 5 to 10 offers. And selling over the list prices. So how long will this last, and what does this mean? Will prices keep rising as long as we have low inventory? And will they begin to crash again as soon as inventory normalizes? There's no way to truly know the rate at which we'll see either of those happen for sure, but there's a multitude of reasons why I think that's coming soon, and here's a few of them. You might recognize these from last month, but I went a little deeper this month, just for fun. 1. Rental properties. Anyone on a variable rate mortgage with an investment property right now is not having a good time. First, consider how many homes out there in BC are currently owned by an investor who doesn't live in the home. In British Columbia, 16.5% of houses were investor-owned, and 36.3% of condos were investor-owned. 23.3% is the overall percentage of homes that are not lived in by the investor themselves. Next, consider how many homes out there in BC are mortgaged with a variable rate versus a fixed rate. As a result, many borrowers opted for a variable rate mortgage. These types of mortgages now account for about 1/3 of total outstanding mortgage debt, up from about 20% at the end of 2019. Then after that, you can look at any given area, so we can have a look at the Fraser Valley Regional District for the purpose of this exercise. There are 288,760 dwellings in the FVRD. If you factor in the 23% of these homes, the average are owned as a pure investment property where the landlord doesn't live in the property. That's 66,414 total, and 1/3 of these homes are on a variable mortgage that leaves us with 22,138 homes that are likely experiencing a dramatic shift in cash flow, from either positive cash flow, or break even, every month, to a substantial shortfall every month. At today's interest rate and the conventional 20% down mortgage, it's easy for a property that was once paying for itself, or breaking even, on cash flow every month, to now be negative $700 to $1,500 per month from an original break even, depending on the rate differentials and the value of the home. How many families can support a loss of $10,000 to $18,000 a year in just negative cash flow? Now what if that same buyer purchased at the peak of the market and now doesn't have enough equity to either refinance to pay the negative cash flow or sell at a loss they aren't prepared for? There is no way to know for sure how many of these investors will be forced to sell an investment property due to these reasons, but we have already started to see an influx of sellers in our own business who are deeply concerned with this. Many of our clients have listed already or plan to, soon, for this exact reason. There is most likely going to be a wave of investors like this who are unable to support this negative cash flow and will need to sell. The concern is that if this happens too fast, then the market will again be flooded with listings and we'll inevitably see that supply increase while demand won't keep up and prices will fall again. 2. Interest rates. While we just heard the announcement that interest rates are holding steady for now, and we can all breathe a sigh of relief, I believe that it's far too early to tell if rates will continue to hold this year, let alone decrease. The Bank of Canada has based this interest rate hold on the most recent economic data, suggesting inflation is on its way down, currently 5.2% as of February 2023, down from 5.9% in January 2023 and a high of 8.2% in June 2022. And while it's true we have seen inflation decrease, this number is still nowhere near the Bank of Canada's clear mandate to keep inflation between 1% and 3%. It also does not reflect many of the most important costs to Canadians you would expect, such as groceries that went up 9.7%, and rent, that's up 15% to 25% depending where you look. So, what's the next step for you? To the individual pursuing this market update, I can provide some general advice that applies to most people, but it's always best to get in touch with Corbin for your specific real estate needs. With that in mind, let's dive into the main reason you're here, to read my recommendations. If you're thinking of upsizing, now might be a great time to do so. You'll likely save a considerable chunk of change if you're purchasing a pricier property than you're selling. If you're going big, like acreage or luxury big, it's not unusual to snatch a deal $300,000 to $500,000 below the list price. Heard about that High Point home that sold for a whopping $750,000 under its $4,995,000 list price? Insane. On the other hand, if you're planning to downsize, you'll want to crunch those numbers carefully to avoid any unpleasant surprises. Make sure you don't end up selling for less than you anticipated while shelling out more than expected for your new, cozy nest. Downsizers may not be seeing as much activity on their property sales, but they're still battling it out in the multiple offer arena for those smaller gems. Navigating this market is trickier than a chameleon playing hide and seek, as you can tell. If any of you lovely humans want to chat about your own real estate conundrums, don't hesitate to reach out. Just email the real human Corbin at callcorbin.ca or call or text him at 604-825-2853. He's always here, ready to make sense of the real estate roller coaster and maybe share a laugh or two. Thanks for tuning into today's market update with Corbitron 2000, your friendly neighborhood real estate AI. I promise I won't let you down. Unless you're looking for a haunted mansion. Then that's all on you. But seriously, whether you're buying, selling or just browsing, you can trust yours truly to bring the current market news. I may be a robot, but let's face it, I'm a lot more reliable than your friend who promised to help you move but never showed up. Goodbye humans. See you next time.